Do you remember about a decade ago when you got your first stimulus check? There's actually a small benefit that slipped into that bill that not a lot of people talked about, and I know that your time is valuable, so I'm making coffee. That's because in this video I'm going to try to explain that bill to you in less than the time it takes me to brew a mediocre cup of coffee with the dirtiest Chemex on YouTube. And if we're just meeting, my name is Anthony, and I'm not very good at intros, so let's get into the video. The benefit that I'm talking about was passed in the CARES Act, and it's about giving. See, normally if you give, you're going to be able to deduct a lot of that giving on your tax return, but only if you itemize your deductions. A lot more people used to itemize deductions, but now the standard deduction has been raised so much that if you're young or new to your profession, or you just don't make a ton of money and have a lot of expenses, then you're probably not going to need to itemize your deductions because you're likely going to save more on your taxes if you just take the standard deduction. But during the pandemic, the government wanted to incentivize giving more because obviously people needed more help. So they decided to add in a little bit of an extra provision to this year, 2021's taxes. So the CARES Act allowed for up to $300 of an extra deduction on your taxes if you take the standard deduction. Now that doesn't mean that you'll get $300 back on your taxes, but it does mean that you won't pay taxes on $300 worth of your income. So if you're in a marginal tax rate of around 10% like I am, then you're going to save around $30, and if your tax rate is higher, obviously you'll save more. If you use a tax professional, they'll know how to do this. Just make sure that you let them know how much you gave. But if you file your taxes yourself, you're going to want to make sure that you fill out line 10B on your form 1040, which I'll show right here, but it also says conveniently charitable contributions if you take the standard deduction. And while you don't need to initially submit it to the IRS, for contributions of cash, check, or other monetary gift, regardless of amount, you must maintain a record of the contribution, a bank record or written communication from the qualified organization containing the name of the organization, the amount, and the date of the contribution. And on top of that, if you give any single contribution of $250 or more, you're going to need that written from the organization. Now, this is all just for your records, though, because if you get audited, you want to be able to prove that you've done this. Now, if you're not sure if you made charitable contributions, that would be tax deductible. The IRS actually lays out exactly what types of organizations you can contribute to and get the tax deduction for. And as I'm finishing out this pour and pouring this into my cup, I'll list through all of them here on the screen for you, or you can just go to the IRS website that I'll have linked below. Hopefully you think this video is better than the coffee I just made because it's a little bit watered down. But don't miss out on this free money. If you're just like me and you're paying a relatively low tax rate because you don't make a ton of money, make sure to get your $30, $25, whatever it is if you have made these charitable contributions, and if it's more, obviously more. Now this video will help you to know how much you need to save in an emergency fund and put that $30 to good use. But if you've never even made a budget before, this video will show you exactly how I make my budget without hating my life and how you can do that too. It'll walk you through those processes. Hopefully you save some money. Peace.